So you found this secret trading strategy which has 90% win rate and you think you are getting rich. Hold your horses, cowboy, because that's only half part of the equation. The win rate in trading is completely irrelevant on its own. Many put too much emphasis on the win rate and do not understand that a win rate does not tell you anything about the quality of a system or a trader. Unless you don't have a system winning 100%, which I would argue it is impossible, you can lose money with 80% or even with 90% win rate if your few losers are so big that they wipe out your winners. On the other hand, you can have a profitable system even with a win rate of 50%, 40% or only 30% if your losses are cut short and your winners run long. To improve your chances of becoming profitable, you need to find the sweet spot of these two metrics: the risk-reward ratio and the win rate combo that are making you the most profit when applied to your trading strategy. What's up, traders? I'm Petru, and in this video I'll show you what are the risk reward and win rate combinations you must keep in mind if you want to be profitable. The risk reward ratio marks the prospective reward an investor can earn for every dollar they risk on an investment. Win rate is the percentage of your wins from the total of trades you take. Now let's jump into the chart. Let's have a look at this simple example right here. Here we take a trade with the entry at $50,000 and we set a stop loss at $45,000 and take profit at $55,000. Now let's see how we calculate the risk-reward ratio. The risk-reward ratio equals entry price minus stop loss price divided by profit target minus entry price, which in our case we have entry price at $50,000 and the stop loss at $45,000 divided by $55,000, which is the profit target, minus $50,000, which is the entry price. And we have, of course, the difference right here. It's $5,000 between any of these, which is 1, and which gives us a risk-reward ratio of 1 to 1. So this is how you can calculate this. Now, the win rate, of course, as you know already, it's the number of wins divided by the number of the trades you take. And now what we need to find is the minimum win rate. This is what we are looking for. Now, this minimum win rate right here is the minimum win rate we need depending on our risk-reward ratio in order not to lose money. Now, in this specific case, with 1-to-1 risk-reward ratio, our minimum win rate, which is 50%, will make us break even. And if you have any commissions like we all do, so this will turn out to be losing. Now let's go through a table I put together for you to understand better how other combinations of these two metrics are working together. We have here the win rate percentages, and vertically we have a risk-reward ratio. And these cells are at the intersection of these two metrics. So let's see, with 1-to-1 risk-reward ratio, like we've seen in the chart, with a risk-reward ratio of 1-to-1, we need 50% win rate to break even. And as we can see here, with 60%, we turn profitable. Having in mind that we have also commissions and costs, I think it's a good rule of thumb to aim for at least 55% if you are using this risk-reward ratio. Or as we can see here, at 60%, we are going to be profitable. And we are losing when we have a win rate of 20%, 30% or 40%. If we go further, 1-to-2 risk-reward ratio is one of the most popular. And as we can see, we got a huge improvement. If we are using this risk-reward ratio, then we need to have only a win rate of 40% to be profitable. So if we have a win rate of over 40%, like 50% or 60%, we are winning. And of course, if you have a win rate of only 30%, you are losing, and 20% as well. Now, if you go to the next one, 1-to-3 risk-reward ratio, we see that we need a win rate of only 30% to turn profits. With 1-to-4 risk-reward ratio, we see that we get break-even at 20% and we start turning profits from 30% and above. And 1-to-5, we have profit even with 20% win rate. Now, there is something you need to have in mind here. If this is working, this does not mean that it's something you would like to apply in your trades, because that means that you will have long periods of losses. And that's very important to have in mind. So you might have a good strategy, but you might not handle losses well. So then it's not a good idea to use this risk-reward ratio with this win rate, right? So it's very important to find what you are comfortable with. From my experience, I think these two are by far the most popular ones, and most of traders using the risk-reward ratio 1 to 2 are aiming for around 50% win rate. You don't need to use the same, of course. Use what you are most comfortable with, and maybe 1 to 3 combined with 40% win rate. You don't need to use any of this. Use what fits best to you. Don't listen to any expert saying that that's the best win rate or the best risk-reward ratio. I hope this was useful to you, and if I made any mistakes, please leave me a comment and let me know about it. If you enjoyed the video, please smash that like button so other people can see it too. If you are a patron of this channel, check Patreon because I will make this available as a picture and PDF document. Thanks for watching and see you next time.